Good afternoon, good evening, one and all. So, in the last class, till the last class, we have discussed about the basics of insurance, IRDA, life insurance, and the general insurance. And also, kinds of insurance also been discussed in the previous classes. Today, we go for the presentation of insurance documents. So, when you want to enter into an insurance policy, there is a requirement of filling and filing documents and getting a copy of insurance policy. For this purpose, we are going to know about the presentation of insurance documents today. After this, we go for the claim documents also. Then coming to the introduction related to documents. Documents are necessary to evidence the existence of a contract. So whenever you are entering into a contract with the insurance company, for that contract, there is a requirement of evidence that insurance, several documents are in vogue. The documents stand as a proof of the contract between the insurer and the insured. The in vogue in life insurance are premium receipt, insurance policy, and endorsements, etc. So major documents for the insurance is insurance receipt, premium receipt, insurance policy, and endorsement. Then need for insurance documentation. So why we have to go for the insurance documentation? What is the need for the insurance documentation? Life insurance is a legally enforceable contract between two parties, both of whom are legally qualified to contract. So a person who attains 18 years of age is eligible to enter into the contract. Then insurance company, however, will enter into the contract. So both the parties, insurer and insured, so between them, contract will be there. So it is therefore necessary that the terms and conditions of the agreement must be suitably documented in a manner that would make it clear that both parties to the contract are idiom. That is of the same mind. So insurer insured how to understand the conditions, terms, etc. in the same mind. For that purpose, all terms and conditions will be documented on a paper. So idiom means that both the parties understand the same thing in the same sense or of the same mind on the same subject. So understanding by the both the parties relating to those terms and conditions must be the same. There must not be any misinterpretation by any one of the party relating to the aims, relating to the terms and conditions of the insurance contract. So there must be consensus or item between the parties to the contract. This is possible provided all the terms and conditions, rights and duties, privileges and obligations are properly documented in terms which can be clearly interpreted in the court of law. So whenever dispute comes between the insurer and insured, you have to go for the court of law. So there you have to present evidence of the contract called documentation. That document will have all terms and conditions of the contract and rights and duties of the policyholder, privileges and obligations also related to the insurance properly will be written on a paper, will be called document. Then kinds of documents which become necessary at 3 stages of the policy. So insurance is also a contract of utmost good faith. So there must be utmost good faith between the two parties. One is the insurer and another one is the insured, and enforced only in the distinct future. It is therefore necessary that the declarations made by both the parties should be put in black and white for future references. So all terms and conditions, duties and responsibilities, privileges and obligations must be presented on a paper for the future reference purpose. Any suppression, willful and material shall make the contract void. The insured, therefore, has a duty to declare all that he know about himself, his health, his financial status in answering questions contained in the proposal form and other ancillary documents which may be required to by the insurer. So whatever information, personal information relating to the policyholder has to explain in detail relating to his health, his financial status, etc. So, very kind of documents which become necessary at these three stages of policy. Number one, at the stage of proposal, which if accepted result into a policy. So when you are getting a proposal, when you are getting a proposal, so there must be accepted result into the policy. Second stage, during the duration of the policy, where several alteration may become necessary. So you enter into the contract, that contract for 10 years. In during time also, some alterations may be taken place. Number three, at the end of the policy, contract when insurer pays the final claim. So after completion of the term, insurer has to pay amount to the insured, so that final claim is important. For that also, necessary document is required. Documents needed at the stage of the proposal. So when you are proposing, when you are entering into a contract with the insurance company to take a policy, that will be called as entrance stage, the stage of entering into the proposal. So when you are proposing for the insurance policy, there is a requirement of proposal form. Proposal form is a basic format which is filled in by the proposer who wants to take an insurance policy. It can be defined as the application for insurance. So proposal means you are proposing with the insurance company to take a policy, so that you have to fill that proposal form. Proposal form is nothing but application for the insurance. So how many portions will be there in the proposal form? There are three portions in the proposal form. What is the first portion? Gives details about the proposer, his name, address, occupation, and other details. The details of about the type of the insurance that he wants to take, and the name of the nominee to whom the money is payable in case of policyholder does not survive to take the maturity amount. So in the first stage, first portion of the proposal form, who is taking policy, that person name, his address, his occupation, then what kind of insurance policy he wants to take, then who is the nominee for whom money is payable when he is not there at the maturity period time, means he has died and has to get the amount by the nominee. Then second portion of this document relating to the details of the insurance policy that the proposer already possesses, the present health conditions and the proposal history of his health and sickness, accident he might have had, etc. will be there in the second portion. Then coming to third portion of proposal, third portion of proposal, this will be called as the last portion. This portion of proposal form will have variety of the statements made by the proposal form replying to a question. Affirmance that he or she not suppressed, misrepresented, or concealed any fact may be material to the risk. Agrees that his declaration along with the proposal form shall form the basis for the contract, and if any information is found to be false, the contract will null and void. So terms and conditions by the insurance company will be there in the third portion of proposal form. So policy holder, the person who is taking policy, has to read carefully and understand how to give consent for that. Then when you are taking a insurance policy with the insurance company, there must be submission of age proof. There must be submission of age proof. A minor cannot enter into insurance contract by himself, so that who attained the maturity, who completed minority, that person is eligible to enter into the contract. So age is an important factor in dealing the quantum of premium against the policy. The document providing the age, that is age proof, must be reliable, and the insured has to undertake as it is a truthfulness. An insurer accept these documents as standard age proof. So what kind of documents can be accepted as the age proof? So certified extract from municipal records recorded at the time of the birth. So means birth certificate issued by the municipalities. Certificate of baptism are the extract from a family Bible, extract from school or college records, means 10th class certificate, extracts from service registers in case of the employees, identity card issued by the Defense Department, marriage certificate issued by the Roman Catholic Church, domicile certificate, and also passport. So majority documents in India for the nowadays for the insurance, the age proof is 10th birth certificate or 10th class certificate or passport or Aadhaar card nowadays. Okay, non-standard age proofs. Okay, what kind of proofs cannot be considered as age proofs will be called as non-standard age proofs. What are that? Horoscopes, means the horoscope recorded by registered and recorded on a paper by the any pantulu of the temple. Service records of employees other than those mentioned above. ESI card is not age proof. Marriage certificate in case of Muslim proposer is not age proof. Elders declaration is not age proof, non-standard age proof. Self-declaration, I'm having this age, I am giving declaration will not be accepted. Driving license cannot be considered for the age proof. Certificate issued by village panchayat also will not be considered. Only municipal records will be considered. Electoral roll means voter ID card will not be applicable. Ration card also will not be applicable. These are the proofs cannot be considered as age proofs, will be called as non-standard age proofs. The next one is the proof of income. So how much income you are getting either monthly or annually, how to declare with the insurance company. For that purpose, then coming to the proof of income, this document may become necessary whenever the sum proposed is very high. Your income is annually is 1 lakh, but you are going for the proposal of 1 crore. Not possible. So that when you are going for the high sum assurance premiums, then this document is required. Normally, a sum proposed which is 7 to 8 times of the declared income is acceptable for insurance, but proposals do come to the insurer when the known source of income of the proposer is much less compared to the amount of insured decided. So a service holder normally does not face this problem as his sources of income are verifiable. In case of business people, the assessed income is the assessed income is at times much lesser compared to what is desirable income for the amount of insurance desired. In such case, the insurer at the times calls for assured assessed income tax returns or chartered accountant certificates, etc. So, for example, that person is an employee, either private or the government, submitting a salary copy, etc. That is enough so that we can identify directly his income proof. But in case of businessmen, any such kind of documents are not available, so that may be asked assessed income tax returns or chartered account certificate, etc. Such precautions are necessary to eliminate the possibility of moral hazard. Okay, so proof of income is compulsion when a person is going for the assurance of high sum. Okay, then documents needed during the continuance of the policy. So first premium receipts, renewal premium receipts. First premium receipt is nothing but when you are taking into the policy, when you are entering into the contract with the insurance company and taking a policy, you have to pay some premium amount that will be called the first insurance premium. So first insurance premium is the confirmation of insurance. Once you paid the premium, then your policy is confirmed. This document is important as it gives the date of submission of the risk, but its value is nil once the policy document has been issued. Then you have to pay. Then policyholder has to pay regular in regular intervals renewal premiums. Though it is the duty of the insured to pay the renewal premium on the due date, the insurer sends the renewal premium notice to the insured out of courtesy, and non-receiving premiums issues a renewal premium receipts, which is an important document and has to be preserved as it is only documentary proof that due payment has been made. So whatever renewal premiums you are paying, then the premium receipts also have to be preserved carefully for the future references. So insured person, insurer, insured person duty is to pay the renewal premiums. So by way of courtesy, insurer also will give a premium notice according to the timings. Then policy contract. Policy document is a detailed document and it is evidence of the insurance contract which mentions all the terms and conditions of the insurance. So the preamble, first one is the preamble. Preamble to the insurance contract makes the above statement clear and state that this policy is issued subject to the conditions and privileges printed on the back of the policy. The endorsements placed on the policy shall also be a part of the policy and is also makes the reference to the proposal form, saying that the statement given in the proposal form are the basis of the contract. That is the preamble. Then coming to the schedule. Schedule is printed on the policy document, identifies the office which has issued the policy. It states the name of the policy holder, the date of the commencement of the policy, and identification number of the policy called policy number. So name of the policy holder, the date of the commencement of the policy, and identification of number of the policy means there will be called as the policy number will be there in the schedule. Next one is the beneficiary's name. Beneficiary name is the nominee actually. So beneficiary name is also mentioned along with the address. It also states the name of the nominee and the date up to which premium has to be paid. Okay. Then the policy document is signed by the official of the insurer and dated and stamped as per the provisions of the Stamps Act. Okay. So this is the relating to the policy contract. Then coming to the endorsements. The life insurance policy being a long-term contract, more than 5 years, more than 10 years, more than 20 years also based on the age. It is quite likely that the conditions may also change over the time. So in the during course of the term also, conditions may be changed and that an alteration or change in the policy conditions may be required. The insurers normally permit such changes which are in the interest of the policyholder and also simultaneously do not adversely affect the insurer's interest. Insurer will accept normally those kind of changes, any correction in the names, any correction in the addresses, any corrections in the nominees' names and nominees' addresses, etc. It has to be noted, however, that the insurer is not authorized to make any change in the conditions of the policy during the continuance except such which has been agreed to in the beginning of the policy. An insurance policy, in this sense, it is called unilateral. Okay, then all such alterations are effected by an endorsement on the back of the policy or by a separate memo which becomes a part of the policy. Let's wait. Yes. Sharing is going on or not, have to check. Then coming to the duplicate policy. What is duplicate policy? A policy document is a valuable document and can be used for mortgage, etc. Loss of policy document does not absolve the insurer from the liability of payment of the policy proceedings when the claim arises. The claim can be settled on the claimant's furnishing an indemnity bond jointly with one surely. So any loss of policy document is happened, then duplicate policy copy 100% has to issue by the insurer. If a policy is irrecoverably lost, a duplicate policy can be issued after following certain procedure. The insurer satisfies itself that the circumstance leading the loss, being so satisfied, the insurer insists upon the advertisement in a newspapers, production of an indemnity bond, and payment of policy preparation charges, and thereafter a duplicate policy is issued. The duplicate policy is stamped to duplicate policy. So when original copy is lost, duplicate copy will be issued by the insurer by satisfying some conditions. Okay. So first we have to give advertisement to the newspaper with the loss. Then we have to produce an indemnity body. Then we have to pay payment for the preparation of duplicate policy. Then on that policy document on stamping will be there, that is a duplicate policy. Okay. Then coming to the nomination. So what do you mean by nomination? Nomination is a nominee, means we have to nominate one person to claim when we are not surviving up to the term. So generally nomination is made at the time of taking a policy. In case it is not done, it is possible to make nomination subsequently by the endorsement of the policy. It is also possible to change the nomination subsequently by the endorsement. After marriage, such change in the nomination is normally required. So you have taken a policy before the marriage, then after marriage, wife will come. So you want to change the name of wife in the name of nomination, so that also can be the endorsement. Okay, so nomination is nothing but nominating a person who is the beneficiary after the term completion or on the death of that insurance policy holder. So if that nomination must be given at the time of taking insurance policy only, if not taking place, later can be go for the endorsement, means can make the alterations in the document. So normally in the case of marriages, after marriage, this kind of endorsements will goes on. And coming to the assignment. An assignment of a policy in favor of other person or institution can be effected by an endorsement on the policy. Reassessment can also be done by the subsequent endorsement on the same policy. As a nomination is automatically cancelled due to an assignment, after reassignment, it is necessary to make a fresh nomination. An assignment of a policy in favor of another person or institution can be effected by the endorsement on the policy. So reassignment can reassignment also can be done. Subsequent endorsement on the same policy as a nomination is automatically cancelled. Then renewal notice. So renewal notice nothing but keeping the policy in force in the interest of the policyholder and also of the insurer. The insurer loses the valuable protection that the life insurance policy ensures. The insurer loses because without the renewal premium coming. So when renewals are not making by the policyholder, a renewal notice will come from the insurer. So this is a courtesy notice. Every period beginning, every term, every period interval beginning, a notice will be served by the insurance company to the policyholder about the renewal premium. An insurer therefore sends out regular premium notices even though it is not a legal requirement. So giving a notice of renewal premium is not a legal requirement, but because of courtesy, insurer will give a notice to the insured. Premium notice is usually sent before the due date of the premium. Premium default notice also will be given. What is the premium default notice? Whenever premium date is over, but premium not paid, renewal premium not paid by the policyholder, then premium default notice will be issued by the insurer. Issue of final lapse notice. So keeps on giving notice about the default notice, but even then policyholder is not reacted, then final lapse notice will be given by the insurer. So intimation to agent. Agent being virtually connected with the continuous of the policy. He also stability informed every time about the renewal notices and default notices and final lapse notices. Then coming to the conclusion, life insurance is being a legally enforceable contract. need to be documented with the details of the rights and obligations of the parties to the contract. Proposal form duly filled in the signed by the proposer is the first document which forms the basis of the contract. Every time the insurer pays the premium, he receives the premium receipts. Premium needs to be paid in time. Non-payment of premium leads to policy lapses. Reinstallment of the cover is called revival of the policy. If the policy is not revived, the policy can become a paid up policy for the reduced sum assured under the certain conditions. The policy document mentions in detail all the rights and obligations of the policyholder. The agent is advised to explain the various provisions of the policy to the policyholder. The wordings in the policy document are of technical nature and hence the need for explaining. If there are certain endorsements on the policy that need to be explained to, it needs to be explained that the policy is a valuable document and needs to be kept in safe custody and in the knowledge of the close relatives. This is the conclusion relating to the policy documents. So this is the information relating to the policy documents when you are taking the insurance policy. Then we go for the claim documents. Right. So time for the no. So till now we discussed about the policy documentation. Policy documentation is the document which is containing conditions, terms and conditions, and duties and regulations, the obligations of the policyholder. So now we are going for the presentation of insurance claims. Insurance claim is nothing but death has been taken place, then we are presenting a claim. Our time is completed, then we are going for the survival benefit that also will be called as insurance claims. Now we have to understand what is a claim. A formal request to the insurance company asking for a payment based on the terms of the insurance policy will be called as a claim. A formal request is making by the policyholder or the nominee of that policy to the insurance company for the payments based on the terms of the insurance policy. Insurance claims are reviewed by the company for their validity and then paid out the insured or requesting party on behalf of the insured once approved. So after submitting the request will be reviewed by the company and validity and then paid out the insured or requesting party. If insured is not survived, then requesting party will be a nominee. To them, amount will be approved by the insurance company. Then types of claims. There are two types of claims. One is the maturity claim. Second one is the death claim. Maturity claim is nothing but after completion of the term, the policyholder have survived, then we go for the maturity claim. Death claim is nothing but during the term only that policyholder have been died because of various cases, then nominee will go for the claim from the insurance company that will be called as death claim. Then coming to the maturity claim. On the same date of maturity, life insured is required to send a maturity claim. So discharge form and obligation policy bond well before maturity date to enable them timely settlement. Maturity claim is nothing but term is completed. Then we are asking for the payment. Insurance policy holder is asking for the payment. Then company has to pay amount on time basis. Coming to the death claim, in case of death claim or rider claim, the following procedure should be followed. What procedure to be followed? Follow these four simple steps to file a claim. So claim intimation or notification to the insurance company. Number two, documents required for the claim proposing. Number three, submission of required documents for the claim proposing. Number four, settlement of the claim. Simple four steps will be followed. So we have to give a claim intimation. Then documents required the claim processing has to be submitted. The submission of required documents for claim processing also should be submitted. Then settlement of claim will happen. This will be called as death claim or rider claim. Then claim information and notification. What is claim information? The claimant must submit the written intimation as soon as possible to the as soon as possible to enable the insurance company to initiate the claim processing. The claim intimation should consist of basic information such as policy number, name of the insured, date of death, cause of death, place of death, name of the claimant. Okay, these have to be submitted along with the claim intimation. What to submit with the claim intimation means you have to write these information on the claim intimation or claim notification. Policy number you have to mention. Name of the insured should be mentioned, means the person who has taken the policy will be called as the policy holder's name. Then death of policy holder, then cause of death of policy holder, and place of death of policy holder, and who is claiming that, who is the nominee, those to be mentioned on the claim intimation. Okay, the claimant can also get a claim intimation notification from the nearest local branch of the insurance company or their insurance advisor or agent. Alternatively, some insurance companies also provide the facility for downloading the form from their website. So where you have to get the claim intimation, a standard copy of claim intimation notification will be there. Either you get that copy from the nearest branch of the insurance company, or you get from the advisor or the agent, or you can download from the website of that insurance company. Then documents required for claim process. What kind of documents are required for the claim process? The claimant will be required to provide claimant's statement, original policy document, death certificate, first information report, post-mortem copy, etc. have to be submitted. Certificate and records from the treating doctor, hospital because of illness. Advance discharge from the claiming processing. Based on the sum at risk, cause of death, and policy duration, insurance companies may also request some additional documents also. What to submit at the time of claim information or claim notification? So we have to submit original policy document. Nominee has to submit original policy document. Then FIR copy to be submitted if that is a accidental death. If a certificate of treating doctor or hospital to be submitted in case of illness. Okay, these all to be submitted based on the policy duration. Then sum at risk, we have to submit other kind of documents also. Then submission of required documents for the claim processing. For faster claim processing, it is essential that the claimant submit complete documentation as early as possible. A life insurer will not be able to take a decision until all the documents are complete. Once all relevant documents, records, and forms have been submitted, the life insurer can take a decision about the claim. Okay, then settlement of the claim. Settlement of the claim. So as per the regulations of 8 of the IRDA means Insurance Regulatory Development Authority. This has been taken in the 3rd class. Policyholders Interest Regulations 2002. The insurer is required to settle a claim within 30 days of the receipt of all the documents, including certifications sought by the insurer. So all documents have been submitted by the nominee. Then within 30 days of receipt of all documents, insurance has to settle the total claim. However, the insurance company can set a practice of setting the claim even earlier. If the claim requires further investigation, the insurer has to complete its procedures within 6 months from the receiving of the written intimation of the claim. So 30 days is the maximum period of claim settlement if all documents have been received. Sometimes insurance company may be settled earlier also. If the insurance company having further investigation, requires further investigation, may be taken 6 months also sometime. Then claim requirements. What kind of claim requirements would be there? For death claim, how to submit a death certificate. have to submit a original policy band, claim forms issued by the insurer along with the supporting documents. So claim form has to be taken from the insurance company, either at the nearest branch or from the agent or from the website of insurance company. Then coming to for accidental disability or critical illness claims, copy of medical records, test reports, discharge summary, admission records of hospitals and laboratories. Along with that, original policy bond, claim forms along with the supporting documents. Okay. Then claim requirement for maturity claims. For maturity claims. Maturity claims are nothing but term is completed, then policyholder survived. So original bond have to be submitted maturity claim form by taking nearest branch of the insurance company or from the agent or by downloading how to submit to the insurance company. Okay, so this is the information regarding the settlements. Then time is there so that we have to go for little discussion relating to the kinds of insurance once again. So I'm searching for on the first day we are facing a PPT sharing problem. So once again, I want to give some little information relating to the types of insurance. Any risk that can be quantified can potentially be insured. Below are exhaustive list of the many different types of insurance that exist. A single policy may cover risks in one or more of the contagious set out below. For example, vehicle insurance would typically cover both the property risk and liability risk. Property risk related to theft or damage of the vehicle, then liability related to legal claims arising from the accident. Claim insurance policy in the US typically includes coverage of damage, etc. Then types of insurances. Life insurance will be there, property insurance will be there, health insurance will be there, auto insurance will be there, home insurance will be there. Health insurance relating to the health of the life insurance relating to the lives of human beings, property insurance relating to the personal properties, house, building, etc. Health insurance relating to the medical health of human beings, auto insurance relating to the motor vehicles, home insurance relating to the house. Then coming to the life insurance, provides a monetary benefit to the deceased family or other designated beneficiary may be specifically provide for the income to the insured person's family, burial, funeral, and other funeral expenses also. Then coming to the certain life insurance contracts accumulate cash values. The endowment policies will be there, liquidates wealth, then tax losses will be available, then saving also possible relating to the life insurance. Coming to the home insurance will give protection to your home because of various risks relating to earthquakes, maintenance related, house owners' responsibilities, separate policy responsible on home insurance. Then accident sickness insurance. Under this category, there are four types of insurance: health insurance, disability insurance. Disability insurance, long-term disability, short-term disability, total payment disability. Third one is the disability overhead insurance. Then fourth one is workman compensation insurance. Coming to the health insurance, insurance will be taken by the individuals for the future illness relating to him to bear the medical expenses. So disability insurance means, so any permanent disability are taken place or long-term disability taken place means that person cannot earn because of that disability, insurance policy will cover for that. So long-term disability, disability overhead insurance allows business owner to cover the overhead expenses for their business while they are unable to. Disability will provide the person cannot work at all till the death, then that kind of insurance policy will be called as total permanent disability. Then coming to the so property insurance provides protection against the risk to property such fire, theft, weather damage. This may be include specialized forms of insurance such as fire insurance, flood insurance, earthquake insurance, home insurance, boiler insurance, etc. Then fire insurance. Fire insurance may be relating to the fire accidents. Then aviation insurance relating to the flying. So protects aircraft hulls and spares and associate liability risks such as passenger, third party liabilities, etc. Then coming to the boiler insurance, also known as boiler and machinery insurance or equipment breakdown insurance, insures against the accidental physical damage of boilers, equipment or machinery. The builder's risk insurance also explained clearly in the previous class. So builder's insurance against the risk of physical loss or damage of property during the construction. Builder's risk insurance is typically written on the all risk basis covering damage arising from any not otherwise especially. Then coming to the crop insurance. Crop insurance, one kind of insurance relating to your crop. Farmers will take this kind of insurance, may be purchased by the farmers to reduce or manage various risk associated with the growing crops. Such risks include crop loss or damage caused by weather, hail, drought, fraud damage, insects, disease, etc. This is the crop insurance. Normally will be taken by the farmers. Then earthquake insurance is a form of property insurance that pays the policyholder in then sorry for the inconvenience. This is the earthquake insurance. Because of earthquake, any property is damaged, then the insurance will cover. Then coming to the flood insurance. So we have seen tsunami in the previously. So any property damage, life damage, etc., relating to the flood insurance, floods, this insurance will cover. Then marine insurance. This marine insurance is relating to ships. Ships hulls means total body of the ship, and logistic means transportation of vessels on the ship, then goods on the ship, and passengers on the ship comes under the marine insurance. Natural disasters insurance. This covers specified expenses after the natural disaster and the policyholder's name, house, home, unhospitable. So, okay, storms, etc. will come on that. And terrorism insurance also one of the kind of insurance. You might have know the 9/11 attacks in US. So that kind of losses because of terrorism will be covered by terrorism insurance. Then other types of insurance also available: all risk insurance, blood stock insurance, business interruption insurance, collateral protection insurance, legal expenses insurance, locked funds insurance, livestock insurance. Livestock means, for example, you are having a poultry farm. So all chickens in the poultry farm will be called as a livestock. So some disease has come, all poultry chickens have died, then that will be called a livestock. For example, you are having a cattle field, means you are the businessman related to the myth. You are having buffaloes or the cows. Those will be called as a livestock. The nuclear incident insurance, pet insurance means we are having a cat, bird, parrot, dog, etc. as a pets. So on that pets also you can take the insurance. Pollution insurance, travel insurance. When you are traveling one place to other place, so risk is high, so that you can take the travel insurance. Unless you're taking a travel insurance, you cannot fly from India to other country. Okay, no? For example, especially US here, travel insurance. So these are the types of insurance. Okay, so this is the four details regarding the insurance class from last 6 days. So all the best.